All right, welcome everybody. This is Pup's Office Hours, June 8th. My name is Danny Naz. Some of you may know me as the Pup of Wall Street on Twitter, YouTube, and Instagram. So this week, CPI is on my mind. We have our CPI print coming in Friday morning. And then we have FOMC next week on Wednesday. So these two events really are going to play a pivotal role in which direction the market heads over the next week. But before we get to that, a little bit about myself. My name is Danny Naz, as I mentioned, Pup of Wall Street. And yeah, I've been trading full-time for 3 years, but I've been in the markets for 8 to 9 years now. This is my bi-weekly office hours. It's going to be about a 60 to 75 minute session. Sometimes we run a little longer, but mostly lands at around 75 minutes. We're going to review market sentiment, process, hunting for trade ideas. We're going to review some of the trades that we've gone over since May and June, my watch list, alerts, all the good stuff, all that jazz. Then that'll probably run about 30-35 minutes going through the charts. We'll also go over the major indices. And then we'll do a chart request session. So if you have chart requests that you want to see, drop that in the chat as I'm talking. And if you have any questions, you can also drop that in the chat as well, because we'll do a Q&A session afterwards. So as a reminder, I do all of my charting on TrendSpider. I am a certified partner on the platform, and I do most of my options and dark pool activity through Blackbox, and use Trady Ticks as well for some of those algo trades. And I like their watch list system as well. So for those of you who are members, don't have to pay attention to this, but just for those who are not, this is my educational platform. I send out swing trade ideas sometime between 8:30 Eastern Standard Time every morning. I have about 20 plus hours of trading education on the platform. I run a top 10 conviction long-term stock list that I update weekly on the weekly charts. You get access to my TrendSpider scans and watch list, my trading rules and documents. Chart requests come in pretty quickly. So if you get that to me, I usually get back to you in a couple of minutes. And we, again, run these office hours every 2 weeks, always on Wednesdays at 7 p.m. Eastern Standard Time. And then I also do a weekly video. I do that on the weekend. We go over the top 10 to 12 charts that I'm looking at for the coming week. In addition to that, I also do some trade review videos and some midweek review videos as well. If anything is pertinent and comes up, I'm happy to do that as well. So that's $79 a quarter, $275 for the year. And then I have the executive plan, which includes 4 hours of coaching calls. It also includes lifetime access to my Fibonacci course and any updates that come along with it. And then certainly priority support on Twitter DM. And that's $4.99 a year. So that's my offering. That's what I do on a daily basis. So let's start talking about charts. So bear with me while I get my charts up here. Bear with me 1 second. All right, perfect. Well, before we get started, let me just get a check to make sure everything looks good here. Looks like charts are up. So bear with me 1 second. Let me get to that SPY chart. And let's take a quick look at the major indices first. So let me properly anchor my volume tool here to the prior high. And you could see since the all-time high, let's see, and grab this tool. When we had the all-time high here, you had the drawdown, and you had our first bounce. That was just at about 9%. Then we had another drawdown, and then we had another bounce, and that was around 12%. And then we have a bigger drawdown, and now this bounce is sitting right at around 9.7 to 10%. So we're in that range where, we need to either break out or we're going to get rejected and we're going to come down pretty hard. And this is why I was saying at the top of the hour, with FOMC on next week and CPI on Friday, if CPI comes in hot, if FOMC, if the Feds come out a little bit hawkish, those two things would send us back to the lows over time. And you could see we've really been struggling with 415 on the SPY. So this is a really critical level. You could see we only one day on the 2nd last week, we broke out. And then the next day we put an inside day in. We tried to break higher. On Monday, we couldn't. On Tuesday, we stopped right there. Today, we also came up wick to 415, got rejected. So this is being a very, very contentious level. And we're just consolidating a lot of intraday volatility. It's just been a really tough environment to trade. So the best thing to do in this environment is really just to sit on your hands and let's wait to see which direction the market chooses. We also have this declining 50 simple moving average right here that will act as resistance as we come into it. So even if we break 415, we have to watch 420 and then possibly 421 to see if we can break through that 50 simple moving average. Next up is the Qs, very similar story, anchoring this to the all-time highs. This bounce here, 10.7%, this bounce here, 16.9%, and this current bounce here, 12.25%. And so again, very similar. So 415 was the number on SPY, 309 is the number on the Qs. And you can see we just can't break through this level. We go through it intraday, like look at all these intraday breakouts, again, similar to last week on that second we broke through and, acted as support. That turned into resistance here. And so very difficult level right now. But trust me, once we pass this level, then we should start to see the market trend higher. But right now, I think everybody's just waiting on, pins and needles, waiting for CPI and FOMC. IWM, similar story, but it's actually been a little stronger, which has been interesting. We did break through the 50 simple moving average yesterday, and we put an inside day in today, but got rejected off that 50. So want to see if we come back up to the upside or come out to the upside or go down to the downside. So under 186, I would be bearish on IWM, which is all your small caps. But then over 190, we should test probably around 194, potentially 197, which would be right at the top of this down channel, this downtrend line. So that's what I'm watching for on IWM. And what's interesting in this environment, while we're chopping sideways, volatility has dropped. And so that's a good thing. We want volatility to be lower. But again, I think once CPI comes out, volatility will tick back up. And then once FOMC comes, volatility will also tick back up. So for now, where volatility is dropping, but it's a very low volume environment and really not much momentum to the upside. We're seeing strong opens, whether it's to the upside or to the downside. But after that, it's really just a lot of just chop intraday. So now let's take a look at some sectors that I've been watching. So one of the big sectors that's really been bouncing, and rightfully so because it's just been absolutely beat down, is KWEB. This is going to be your Chinese tech names, Baba, JD, Baidu, Pinduoduo. So yeah, I mean, we really have been booking here. Was watching 32. This kind of range right here to 32 to 34 has been acting as prior support and then prior resistance. Now that we've broken through it, it should act as support, but we're seeing some gaps here. So what you want to do is just look at some of these individual names and see where the relative strength is. But look at what happened. We gapped over that 50 simple moving average here in blue, and we've been pushing higher. So, just looking at this chart objectively, it looks like this might come up to the 200 simple moving average and test it. I think that'll be a really big test. And if we break above that, and certainly above 38.81 on KWEB, then I think that bodes well for these names. But I'm not really big into trading these names, the Chinese stock names. It's just too risky for me personally. And there's a lot of other relative strength trades out there that I feel like have a lot less of a risk profile. So one of those sectors is clean energy or solar. So the ticker TAN tracks some of the top solar names. You're looking at ENPH, which has been really good. We had a trade alert go out, I think over 179, I believe. Solar Edge, SEDG, Run has actually been on a nice run lately. First Solar is another. And what I would just do is look at what sectors are running hot, and then look inside that sector ETF and see what are the names that are showing relative strength. You could see here on 10, we had a downtrend line that broke out, retested, and then ran, pushed through that 50 simple moving average, came right up to that 200, and that's where we're consolidating right now. I think once we get over maybe $79, $80, solar can really run up to 100, 10 that is. So we'll look at some individual names. I know ENPH is on my list of trades that we'll look at, but that's been a really good trade over the last couple of weeks. Energy has been energy, right? Energy is just continuing to kill it. Let's see, we have XOM, ExxonMobil, CVX, Chevron, COP, ConocoPhillips. We're going to go over CVX. That's been a good trade over the last week or two. And energy, yeah, I think just in this global macro environment with the war in Ukraine, supply chain issues, the global supply of oil and where it's been routed because of this war in Ukraine has been putting stress on the oil supply. And that's why oil prices have gone up. I mean, I just filled up my car a couple of days ago, and I think I paid almost $85 to fill up my tank, where it used to cost me, $45, $50. So I think a lot of people, especially here in the US, are feeling it in their pocketbooks. And certainly depending on where you live, if you live in California, those gas prices are really, really high. So if oil remains elevated, I think some of the projections, they're looking at oil going to maybe 150 a barrel in the summertime, then gas prices are going to continue to rise, which is going to, cause some of these names, these ExxonMobils and these Chevrons, to continue to rise in price. And another sector that is going to benefit from that, which we'll talk about a little bit later, are the shippers. Your ZIM, INSW, STNG, some of those names that we've really nailed the first half of this year. This is where our eyes should be, energy and shippers, until otherwise, the macro situation resolves itself. That's where my eyes are going to be. Also ICLN, this is your clean energy. Let me get this up here. So you're looking at also ENPH, but Plug Energy, Nextera, NEE, and some other names. This is also coming back into its 200 simple moving average. Above that, I would be pretty bullish on clean energy. So that's pretty much the sectors that I'm watching. Certainly there's individual names that are showing relative strength outside of these sectors, but if you just focus on energy and the shippers in clean energy and solar, I mean, there's so many really good trades that we've nailed over the last, 2 to 3 months. So I'm just going to continue to ride those names until the market tells me otherwise, right? I mean, tech has been not great. We've definitely seen some oversold bounces, some stocks that have just been absolutely hammered and beaten down that have just bounced, but I'm not necessarily seeing too much relative strength in tech. So talking about tech, let's take a first look at Apple. And, I've been talking about Apple for a little while now, and I do have a trade plan out over 150. We keep flirting with this 150 level. As you could see right here, it's just been a really, really difficult level. Anywhere from 150 to 151, you could see we got rejected here. We had 3 days, 2 days that we got rejected, 1 day where we had that false breakout. I think this was a bull trap right here because we gapped down that next day. And then we had outside bar here. And then not really much of a, it's kind of like an inverted hammer here at 150 today. So not really that much strength here in Apple. We really need to see Apple through 150. And I've been saying this on Spaces, if Apple can get over 150, then that means the market is ready to run. I'm just watching Apple 150. Apple over 150, I feel the market's ready to move higher. 153, 157 to the upside would be a really good trade for Apple. But 150 is really, that's the do or die level, I think, not only for Apple, but for the rest of the market. Next up is Micron. I was seeing 2 weeks ago, I saw some really good relative strength in semiconductors. So ticker SMH, you could take a look at that. That's the sector ETF. And we caught trades on NVIDIA and AMD. And I was watching, Micron, and again, gave us this false breakout here through 74.56, and then gap down the next day and is just right back into this falling wedge. So this one triggered that one day, and it just blew up, after that. So I think you just have to wait for another daily close over 74.56 on Micron. LUV was another one. It came into our trigger and just got rejected. This was on June 1st. Let's see where that trade plan went. It's hiding on me. I don't know where it went. Maybe it's on the weekly chart. Let's just double check. It's not there. All right. Well, any event, the trigger was through 46.38. It just did not trigger. It got rejected. This is why it's so important when I put out a trade alert. I'm always expecting you all to manage your own trades. But what I say is there's two ways to take these trade alerts. The first way is you buy it as it breaks on a lower time frame. But if you do that, you absolutely must wait for that to close on the daily over the trigger. If it breaks intraday and closes underneath the trigger, I would just take a loss and stop out of that trade. Me personally, that's my style. And I would wait for that daily close over. The other way to do it, which is more conservative, is just to wait till the end of the day. And if you're closing over that level, then I think it's safer, to take the trade there. Generally, you get a back test on that level and then a bounce off of it. So, but LUV is setting up. It doesn't look great under the 200 and now back under the 50, but it does look like a TTM squeeze is setting up. So, going to keep a close eye on airline tickers in the coming days and weeks. Here's T-Mobile. We did get a nice trigger off of the 135 level, and it looks like we back tested that and held today. So as long as we hold over 135, still good to stay in this trade. 136, 140, 146 to the upside looks pretty good. Here's FLNG. This one was a trade alert that went out on 6/3. It gapped over on Monday. Tuesday, we put an inside day, and today we gapped down back under our trigger. So a couple of people that DM me, we're gapping over pretty big. Do I take the trade? And I generally say, if you gap over your trigger, don't take the trade, because what's going to happen is it's going to eventually, usually sooner rather than later, back test that trigger and close that gap. So you usually will get a back test entry or a back test opportunity to get that entry. But now what I'm seeing is an island reversal, right? So this is when stock gaps up and then gaps right back down. So this is an island reversal. So I would just say for now, just this trade is negated until we get back over and get a clean close and a gap fill over 30.32. Next up is LXU. This is another one, came right into the trigger and failed. And so we just don't take those trades, right? If we fail at the trigger, we don't take the trades. The trigger is the trigger for a reason, because it's generally meant to be a level that should be resistance, and it should be good resistance. It's not like a soft resistance level. And so if you fail at that level, good, don't take the trade. But if we break through that level, that means the trade is more than likely going to move. All right, here's RRC. We had a trigger entry through 36.60 yesterday. It failed right at this level today. So I think we just have to be cautious. I do have my stop loss under $34. So it just might need another day or two to set up in this consolidation. But it does still look like a pretty good setup here with a nice pennant. So just got to be patient on RRC. Next up is CCJ. I put this trade idea out on 5/16. And then I think yesterday or the day before yesterday, there was news that the US government was going to be purchasing enriched uranium, I believe. And so that sent uranium stocks yesterday soaring. And so this boded really well for our trade, because the entry was over 22.86 and we're up to 27.32 now. So we are, let's see, 22.86. So we are up about 19% on this trade in 2 weeks. So nice trade here on CCJ. Keep a close eye on uranium stocks for the next couple of weeks. And keep in mind, I really like these trades. We're over the 200. We're over the 50 simple moving average. These are the types of trades that we should be looking at, not the stocks that are absolutely decimated and beaten down or trading underneath their key moving averages. because when you have stocks that are trading underneath the key moving averages, you're giving them that many more opportunities to see resistance on the way up. You know, they have a lot of overhead supply. You're going to have your 50, you're going to have your 200 moving average above. I'd much rather trade these relative strength names that are over their key moving averages. All right, here's CVX. So that trade alert went over 175.54. We're up now to 181. So we hit our second target today. First target's 178. Second target, 181. Our next target is going to be 189. And then we're going to come into this target zone. So the way I'm looking at this is potentially as a 5-wave move up. So you could see we have our wave 1, wave 2 pullback, wave 3, wave 4 kind of triangle here, and then wave 5 right into this 195 to 200 level. So I always say don't count on the waves, because you know it's not always going to run exactly the way you think, but use your judgment, use these price targets to either to take profit or to start scaling out of the position, or to move your stop losses up. As you're hitting these price targets, make sure you're moving your stop losses up. You don't want a trade to reverse on you and, you know, watch you go, you know, green to red and lose all your profits. I mean, that's one of the worst things you could do for your trading psychology. So next up is NFE. This is New Fortress Energy. And we took this trade over 44.57. And we are now over our first price target. Here's a great example. We broke through, we back tested 49.30, which was our prior high, which was our first price target. And now we're closing over $50. So 53, 57 to the upside are going to be my next target. And you could see the risk to reward on this was pretty good, 4.6 to 1 risk to reward. So not a bad trade here on NFE. Here's another fan favorite. A lot of people have been talking about VET. This is Vermillion Energy. This is another very clean Elliott wave setup. We have our wave 1, wave 2 pullback, wave 3, wave 4 pullback, and it looks like wave 5. I'm looking at $28 to $30 for that wave 5 target. So keep a close eye on that level if you're in this trade. Again, another oil and gas name. I mean, there's so many of these that are running so hot. Here is ENPH. We've been talking about this one for a few weeks now. I really like this trade setup for a couple of reasons. Number one, we had a compressed 50 and 200 simple moving average right on top of each other. I love when that happens, because I know that if we break through that, then there's no more moving averages that I really need to concern myself up above. But on top of that, we also had this beautiful wedge setup pretty much from November of last year. And so not only did you break through that, you broke through the wedge, you also broke through that 50% retracement, Fibonacci retracement at 197. And once we broke through that, we came right up to that 618. And, you know, I basically cautioned everybody, just watch the move into the 1618, watch the move into 216.82. You should be at the very least taking profit there. If not, moving your stop losses up. At this point, if you took the entry at 179, your stop losses should be slightly under 197. But I would have taken profit here at that 618, because look at the resistance that you're seeing back here, right? Exactly on that 618, exactly on that 618. So, you know, this might come, it might back test the wedge and then bounce up there, or it might back test the wedge and fail. You don't know, but I'd rather err on the side of caution in this market and take profits when I get them. Next up is AVD. This is American Vanguard Corporation. This one triggered, looks like it's coming back in back testing. Really nice move off of that 50 simple moving average. Actually, let me turn these clouds off. We don't need them right now. But yeah, looks like a pretty good trade, still holding that setup. So keep a close eye on AVD. NOC, this is going to be your defense contractor setup. So we've been in this since 408. We had a second entry at 471. We did get that target breakout a couple of weeks ago, and it looks like we're coming back to back test that entry right now. So watch for 472 to hold. Next up is another energy name, ConocoPhillips. Mentioned this one when we were talking about XLE. Easy entry over 107.90. You saw right back here, we had a resistance, resistance, resistance. Here was the trigger, or sorry, there was a breakout. Here was the trigger. Oh, sorry, that was the trigger. Here's the first target. I meant 110.47. Second target 116.35. And then our third target 122.84. So we hit that third target yesterday and starting to fail or consolidate at that target now. So keep a close eye on this level. I will update this tomorrow with new levels to the upside. Okay, moving on, LTHM. This has been another name that we've been watching. It initially broke through our trigger, ran to our first target, inside day. It broke down, broke below our trigger, and now we're back above our trigger and then back below our trigger. So this one has been all over the place. I would probably say stay away from it just for now. It looks very volatile. I want this to kind of consolidate and form some sort of pattern setup before I look to take it again. Next one is Tallow. Again, trigger was at 20.39. We took the trigger here. First target hit, second target hit. We're coming up to our third and final target at 25.82. If we break through that, I will update targets to the upside. But this is, again, I'm just putting out very clearly defined trade ideas. If you take it past my triggers, you just have to manage risk. I mean, that's really what it's about. I'm not saying it's going to stop at my final target. Generally, it may continue, but I like to clearly define my risk. And as a trader in this market environment, I like to have clear targets of where I'm going to be taking profit. HPQ, this one never really triggered. CF, this one triggered and then failed. INSW, this one triggered and it's been consolidating under our first target very, very nicely. I think if this breaks over $25, $28 will come next. It looks pretty good, but that will probably be my final target to the upside on INSW. That's one of your shippers, International Seaways. Here's GIS. This one did not trigger. You can see it failed here right at that trigger. Here's another really good trade. VTNR. We grabbed this through 1143. I have my final target at 2314. So far, we're up about 56% on this trade. So it's been a really nice one. I think we have room up to $23, right up to the top of this channel here. It looks really good. BMY, this is Bristol-Myers Squibb. Didn't quite trigger through 77.51 yet. But I think once we get that nice clean trigger, I would be watching for a move up to $81 to $84. Squeeze is still setting up. Next one up is AMR. Two entries on here, 138 and then 165. We got our second trigger here. Let me put that line back in. Might have deleted that right about there. And 165. Perfect. And so, yeah, this one's moving up nicely. Altamesta Resources. I would be moving stop losses on this. It's in a nice channel up, but it just is not showing good momentum. It's really kind of still trading in a very tight range. Next up is ZIM. We had a couple of good trades on this, but finally just rejected off that 69.70 and it looks like to be coming down. SOI. This is another one that went really well. I had a target to 1462 and we came into that back on the 31st and now we're right back at that level 1462. Another one that has a pretty clean wave setup. So you have a wave 1, 2, wave 3, wave 4, and wave 5. Potentially a little bit more upside on this one, but you got to be really careful. You know, it's going to probably get rejected off of 1462. I would watch for maybe a handle or just some sort of consolidative pattern forming here. And I think, let me just double check, that might have been the last one. Whoops. Yeah, so that's the last name from the May and June trade ideas. So let me know if anybody has any chart requests that you would like for me to go over or any questions that you might have. And while you take a look at Run, I know I mentioned Run earlier. Let's see. Yeah, so run's looking pretty good here. Let's see. It looks like it might have already started to break out. Yeah, so you could see we already broke this down channel here. I'd like it better over 34.64. Let's see, let me get this drawn out properly. Actually, it looks pretty good over 27.21 here. You can see we're over that 50 simple moving average. Yeah, if we hold 27.21, then 33.58 should come next. You just got to be careful there because you have resistance right on that Fibonacci level. And then you have that declining 50 simple moving average. So if we make our way up, this 33.58, I think will be the next big level to watch for the upside on run. Let's see. So no chart requests, no questions. Anybody with chart requests or questions, happy to go over it. Looking at Walmart. All right, let's take a look at Walmart. So let me clear off those notations. Yeah, Walmart, I'm going to go up to the weekly chart. There's a little less noise there. We did have a trigger through 152 that failed. And Walmart has just been in a really big decline here. So let me turn off the after hours and data. I'm just going to take a look to see where we're at here. So this is our trend line, right? And that's our channel. You can see we got rejected off the center of channel. Now we're losing the channel here, and we're losing that 200 simple moving average on the weekly. So not great here for Walmart. Let's take a look at our fib retracement levels and see where that leaves us. So right now, looks like we're at that 382 retracement and we're holding 121.34. If we lose that level, I think the likelihood of us back testing that 108.95 is really likely. Look at this prior high right here. Lines up perfectly with that 50% retracement level. So keep that level in mind. Under 121, basically 109 would be the level I would watch next. Under 109, I would watch 100, and then 96.56, which is our 618 retracement. Yeah, let's see. All right, so Ben, you're saying you're thinking of going short 118 target, long over 130. Yeah, I mean, under 121, I think it might retest that 117.53 level. I like that because let's just look really closely at it. You could see the lows right here, right? Look at those wicks right into that level. Look at that wick right into that level. So if we lose 121.34, maybe even 120.83, the low of this week, then I would say a short down to 117, 118, maybe a week or two out. That could work. I don't know the options are that expensive, but probably staying close to the money, maybe like the 120 puts probably would work. Let's look at VOD. Looking at the weekly chart. Yeah, it's looking just like it's consolidating for now. I guess, yeah, Vodafone, so it doesn't have a lot of volume. What I would say, let's just take a look at this. Yeah, it's getting close to making a decision of what it wants to do. You could see it this sometimes when I see this, like this oopsie kind of breakdown, gets me kind of excited because it means that, it's trying to shake people out. Maybe people have stop losses here. So here's the thing, like our channel to the downside, top of this wedge, is riding right on top of that 50 simple moving average, or excuse me, the 200 simple moving average. I would watch over that level. I would say wait for over, maybe 1750. I think over 1750, it puts us over the 50, over the 200, over the trend line, out of the wedge. And, as far as targets to the upside, what I would say is watch probably 2480 would be my upside target. that basically that golden zone of 22 to 24, probably before you see, maybe, bigger resistance. And then that I would look back and say, look at the, support turn resistance here. We haven't revisited this since we broke down. So 2430 to 2480 looks like a logical level for this to retrace to see if we can get a breakout or a potential breakdown from there. Let's take a look at Costco. So I'll just delete that for now. I did have Costco in a 5-wave move up with an ABC retracement. This does sometimes happen where you get what is it called, an expanding flat, right? So you have an expanded flat that expands past the wave 5 high. It's kind of what it looks like right here. And what I would say, you generally get a pullback to the prior wave 4. We've already pulled back to that level and recaptured it. So this kind of looks interesting. I like it as long as it holds over 444. Let me take a look at some fib retracement levels. So we came right down to the 618. No surprises there. Look at that 618 bounce right there. And then resistance to the upside, what I would watch for is, oops, did that wrong. Maybe back, we could possibly see this, if the low is in, we could possibly see this move back up to 510 to 533 to the upside. Past that, then you more than likely will revisit these prior highs. But what I'd look for is probably a rejection off of 500 to 510, maybe 534. Let's take a look at NVIDIA. NVIDIA, this is the weekly chart. Looks like we got a nice 618 retracement bounce right here. Let me go to the daily chart in NVIDIA. The way I was looking at this was a wave 5 top, ABC retracement, potential wave 1-2 setting up. I think we got to get through 196. If we get through 196, we'll see 200. But really, the key level for me is 200. If we can get over 200, we're back over that 50 simple moving average. We're over a nice psychological level. And then 209, 216, 227 to the upside. Let's take a look at BABA. BABA did not do what I thought it was going to do. It did not get rejected off the top of that wedge. It broke through and then gapped up. This is going back to KWEB that I was mentioning. So this one's showing relative strength to KWEB. You got to watch the 200 simple moving average here. This is the key level that you have to watch. I think it's like 126. Let's get that number. 127.57. Get over 127.57. I think this can run a lot more. But I feel like we'll probably see good resistance around 126 to 127. Let's take a look at AMD. AMD, it's all about $100. We got to hold $100. We got a nice move, had a beautiful trade last week. One of my 106Cs, one of my trades went to the 106Cs went 300% towards the end of the contracts that I was holding. I was scaling on the way up. It didn't hold the whole trade there, but we got rejected right off that 108 change, 109 level, and we just could not break through. I think it's easier to wait for 109, 110 right now, or a back test of and hold of 100. If we back test and hold 100, I think we could see a move back up to 110. But if we fail at 99.52, give or take, then I think the odds are we'll probably come back down. But that would mean that the market's coming down. So. Matthew's asking, Zim, are you worried about news companies are buying less containers? Yeah, that's why I would focus on the container shipping container companies that are focused on fuel transport, not necessarily like domestic items and things like that. Focus on the freight that focuses on oil and gas and commodities, wheat, corn, things like sugar, things like that. I think those will probably do well. If we see a recession and we see a slowdown in purchasing power or a lowering of purchasing power, a slowdown of demand, then yeah, you have to be careful with the shippers that are more focused on disposable goods. Let's take a look at NIO or NIO, whichever way you pronounce it. Yeah, it looks like we're finally starting to break its downtrend line. So here's the thing, like you look at from the prior high, you see the decline here, then the decline accelerated here, and then the decline accelerated here, and then the decline accelerated here. And finally, we're starting to see a series of higher lows, right? As we came into this IPO range, we can go up to the weekly chart just to see it. So right off that 786 retrace at 1538, strong 4-week move. So yeah, I mean, I think, it certainly looks better, but you have to also understand it is, a China name. And so you have to be careful. These definitely can see more volatility to the upside. So for now, possible move back to 24, from here, then 27.31, 37.44 to the upside. NVIDIA, we went over. Let's look at UPST. UPST unable to get back through the top of the wedge. So watching to see if we are putting in a potential double top here at 54. We would know under 35 if that was a double top. But right now, I think it's just stuck in range. I like this back over 54.49. I think over that level, I think it's very tradable back up to about $76. And last chart request that I'm seeing is PG. And this is Procter and Gamble. Another one. Thought I had a wave 5 top here. It looks like that wave count was not accurate. So let's just delete it for now. I'll have to revisit this. But let's see, 1, 2, 3, 4. It might have just had, it might have just had a wave, truncated wave 5. ABC, ABC, ABC. Yeah, I mean, this definitely could be. I have to spend some more time, but this could be an A, B, C retracement. And then what I would look for on the C wave would be a move down to maybe 137. So if PG loses 143, I think this is shortable down to 140, 139, and then 137 to the downside. Again, we're trading under the 50 and 200 simple moving averages. So very difficult to trade above those levels. And you can see from prior resistance, we're trading below this key pivot level of 147. So I think under 147, I feel like it's very shortable. Under 143, easier to short. And then under 140, I think you've got a decent amount of room to the downside. So, okay, let's look at BLNK. This one just in a perpetual downtrend. Very difficult to say where we're going here. Very much like NIO, the sell-off has accelerated, right? So this trend line is here, and then the next trend line is there. And so that just means that the sell-off is definitely accelerated. So I would not try and pick bottoms on stocks like these. We are coming right off that 200 simple moving average. If you were to say, hey, where could I potentially see a bounce? Yeah, where we are now, between $12 and $14. But under that level, then you're probably looking at, maybe 820 to the downside. So very difficult to buy a name like this in the current market conditions. TLT, this is your 10-year bond or 20-year treasury bond. This one's been dropping. It's at a very critical level here at, let's say, 112 to 114. If it doesn't hold that level, then very much likely will come down to like 100 to 102. It's at least what the chart is saying. Intel, sure, no problem. INTC doesn't look that appetizing to me. This is the weekly chart. It actually looks kind of weak, to be honest. Yeah, looks pretty weak under 42.85. I think you've got room down to about $38. I think this is pretty shortable, possibly under $40. Probably got like a $2 short to the downside. Should move pretty quickly, I think. Amazon. Yeah, Amazon's really interesting here. I've been watching it, traded it a couple of times. I'm very curious to see now post split how the stock is going to trade, how the option chain is going to trade. 125 was the level I was watching this week. And I think over 125.85, it looks pretty decent, but we could see a retracement back down to 115. Right now, it's just going to probably trade in a range until FOMC, but over 125.85, I think, there's definitely trades to be had. You also have this pretty decent gap right here. It's a pretty decent sized gap. I mean, this is a $10 gap, so very tradable inside the gap. So watch for that gap to come. Yeah, Walter. I think I was never one to trade Amazon. I'm more of a Tesla, Apple type of day trader. But now with the way Amazon, I think what you have to watch is just watch the options chain, watch the liquidity on the contracts. I think they're even doing like 0.25, like they're doing like 125, 125, 25, something like that. So it's a little funky. So you're going to have to just recondition yourself on how the option chain moves in terms of liquidity. But yeah, I'm definitely interested in trading Amazon, but I might give it a week or two to really see how the option chain settles down and what the volume looks like at the different contract levels. NTR. Beautiful head and shoulders breakdown. Measured move down to 77.21. So let me just move that. Yeah, you can see the breakdown on the neckline here. Clear head and shoulders. Yeah, if you're not already short, watch for a retracement to it might need to retest the 21 EMA. It's pretty extended off the 21 EMA here. And so the problem with that is if you're trying to bottom fish here, you might get caught. Spinning top here on the daily. Looks like this might reverse. Watch a reversion back to 93, potentially back to 95. If you see weakness on those levels, right back to that 21 EMA, that would be the area that I would reload a short. Let's look at TEL. So, TEL you're in. I don't think I've looked at this chart before. Yeah, looks like a pretty good short. The problem is, with these penny stocks, it's very difficult to do TA on them. Let's see. Yeah, I mean, let's see. Yeah, it's hard. It's really difficult. I mean, under 427, 390 can come. Under 390, 343 can come. We're stuck in between that 50 simple moving average and that 200 simple moving average. So I think as long as we're under the 50, you could probably short it down to the 200. You just got to be careful when we get there. Looks like a TTM squeeze is setting up. We are getting rejected off of that 50 line on RSI. So it looks like in the coming week, we might get a nice push to the downside. So just watch these levels that I've marked off. They're not perfect levels. Normally what I would do is I would start going down to the lower time frames and really chart out the levels. But they're pretty decent in terms of what the levels should be. So yeah, just keep a close eye on that. So that's pretty much going to wrap up our chart request session. Does anybody have any questions? Any particular questions on the market conditions, process, anything? I'm happy to stay on for another, 5 or 10 minutes if you guys have any questions, you guys and gals. So Ben's asking what my feeling on CPI is for Friday. I don't know. However, somebody messaged me about 2 hours ago saying that the White House came out or made a statement today that CPI data was going to come in higher than expected. So if that's true, if it comes in hot, then watch for the market to sell off a bit. If it does, then it's going to be really choppy into FOMC on Wednesday next week. And then depending on, so whatever the FOMC, the Fed, they've basically been, trying to bring inflation down. And if CPI comes in higher, then what they're doing means that it's not working. And if it's not working, then you might see us go with a bigger rate hike. And that for the short term will not be good for stocks. So you have to keep that in mind. We need to see inflation come down. We need, the Fed's in QT right now, so they're tightening, quantitative tightening. And so until we start seeing QE, which we're probably not going to see until next year at the earliest, it's going to be a tough environment. That's why it's really important to identify where the relative strength in the market is. We've been doing a good job of identifying where the strength in the market is. Certainly not easy. It's definitely very challenging. But if we remain focused and we remain disciplined in doing what we're doing, then when the market starts to ease up and inflation starts to cool off and conditions start to go back to normal and we come out of this bear market, we're going to have a really good time trading to the upside. But until then, we just have to be very patient and very picky and choosy with the stocks and the trades that we're taking. Hey, Alfonso. Yeah, I actually took a look at Matt's first iteration. I haven't seen it since he's been tweaking it since, so can't really comment on it. But I do like Matt a lot. He's a great trader. Any other questions, thoughts, comments, concerns? Any wins? Any aha moments that you want to share? Got a few minutes. So Raminder's asking, is picking Warren Buffett's stocks work always? Well, listen, I mean, if you look at his track record, right, he's been in the markets for whatever it's been, 50 years. He's a long-term trader. So whatever he's buying thinking 10 years out, more than 10 years out. I know he loaded up on Apple, he's loaded up on gold. Yeah, if your time horizon is decades, yeah, I mean, he's proven himself more capable, very capable of picking and choosing, stocks. He's very low risk. Apple is a very low risk trade. Gold, I think, is a very low risk trade. So yeah, I think you just have to kind of look at what your time horizon is, and if that aligns with what he does, then yeah, I think what he does is pretty good. And then on the flip side, you have somebody like Cathie Wood, who she's also looking long term, right? She's looking 5 years out, 10 years out, but she's more, high beta stocks. She's more volatility and exponential growth. And so it's completely different strategies. And you could see, over the course of like 5 years, she had a massive gains. And then over the last 2 years, she's given back a lot. So, there's two completely different strategies, but two very, good ways you can trade, so long as you understand, macro conditions and how to, apply risk management to that. So Josh is asking, do I trade BTC? No, I don't trade crypto. I invest in crypto, but I don't trade it. If I didn't have a job, right, and I wanted to do something full time, like trading, then, or let me rephrase that. If I didn't want to have a life, then yeah, I would trade Bitcoin. It's a 24-hour market, and so it's just not something I'm willing to do, because you'd have to really dedicate all of your time to it. Obviously I trade full time for a living, and I have other ventures that I'm involved in that I really enjoy and really where my passion lies. So I choose not to trade, but I do like the environment. I've been in crypto since 2017. So if you're into that, then yeah, I mean, it's very tradable. But again, it's just something that you have to familiarize yourself with because it is a very volatile market. And certainly would not recommend trading with leverage. I know there's a lot of leverage products out there, but it's a very, very interesting market to trade. And the people that I know that trade it, they live and breathe it. And I think if you're passionate about it and you live and breathe it, then I would say trade it. But if you're not, I think it's a very challenging environment. All right, we're at the top of the hour. I appreciate everybody that's hung in with me for the last hour. Let me stop sharing my screen. It's getting a little dark over here. I'm not home. I am puppy sitting out at my in-laws, so I don't have my usual setup. But if, like I said, if for those of you who are new to me and to my work, I do run an educational platform. You saw a lot of my members in here that were asking questions. I send out daily trade ideas every day. 20 hours plus of education videos, 10 long-term conviction charts updated weekly, access to my TrendFinder scans and watch list, my trading rules and documents, unlimited chart requests, these office hours every 2 weeks. This is what I do on a daily basis. This is my full-time job. Would love to have you join me if you liked what you saw. And if not, no big deal. Everybody has their own way to trade and analyze the market. So would love to have you on board, but if not, would love to have you back another time. If I'm happy to help you out, if you have any questions or you have any chart requests on these office hours. So appreciate your time. Thank you so much. Hang in there. Let's wait for CPI on Friday. Let's wait for FOMC next week on Wednesday. Let's see where we're at. But regardless, I'm always going to be hunting for the relative strength in the market. We are going to find it no matter what. So have a great evening, and I will catch you all in the markets tomorrow. Take care, everyone.